Thank you everyone for joining us here. Again, Tom Dufour with Big Sky Franchise Team, and today's focus for us is to be talking about the current economic crisis, health crisis that's impacting the world, and really talk about what this situation looks like for us in terms of the current CARES Act stimulus, what's available to all of us as small businesses, how does the funding work, what's involved with it, and to help answer those questions, we've brought in Sam Data, partner with PGV Advisors, a founder and partner with the organization, where they function and specialize in helping small, medium, and large-sized businesses with growing their business, helping with profitability, fine-tuning systems, operations, and just improvement in the systems as a whole. And they also specialize in financing and funding, specifically to help leverage finance as a way to grow a business and to help give a boost, especially given the situation we're in right now, when we're all saying, basically there is with the coronavirus, basically a giant monkey wrench thrown into our economy and kind of has impacted us here. So with that being said, I'd like to turn things over to Sam. And the structure of how we'll do the call today is we'll try to keep everyone on mute as we're going through this. Turn this over to Sam for him to speak and get things started. So, Mr. Data, why don't you go ahead and get us started here? Thanks for joining us.
Well, thank you, Tom, and to all the participants, good afternoon or good morning, wherever you are. And most importantly, hope you are all safe and keeping everybody safe. It's very important during this time. And again, what we like to do, as Tom mentioned, go through the programs that are available for small business owners. And then we'll keep most of the time as questions and answers. So that way you can see in terms of any questions that you have about your company or general questions that you have. Tom, are you putting the presentation coming in, or?
Yes. Can you see it there?
Yes, I can. So
okay.
Let's go through that. I'm going to be pretty fluid. I don't need the presentation to actually explain what it is, but you can go through this a little bit and we can send those information later to you. So about PGV Advisors, we have around 11 locations globally, around 350 people. We help companies to grow profitably, and we also are part of an investment banking arm. So we have all the SBA licenses to do many of the work that SBA allows us to do. So when on March 18th, the law got passed for small businesses called EIDL. So obviously we took some of the training and reach out to the small businesses like this way and see how they will be applicable for these programs. So the next one, please. The two of us, Chris Clabby is also on the line. So if there's any question I cannot answer, we will try to answer those. Go forward. Next one, yes. So today's discussion, there are three things probably. So the first one, we all probably know on March 18th that it came out, called Economic Injury Disaster Loan, or EIDL. This loan, and the second one is called Payroll Protection Program, which is part of the CARE Act that came out last week. And then you also always have the Small Business Debt Relief Program that SBA provides. And your objective is to look into what's applicable for you. Some of them are grants, some of them are loans. What other other additional programs are available for you, and how should you apply? That's the objective of today, is to make sure you all understand and that what it takes to apply those. Are you really eligible for all those? Okay, next one. So the EIDA, the Small Business Stimulus Program that we call it, and it's a part of this $2 trillion CARE Act. And the objective of this for a small business that government wants you to, keep the door open. Even we know might not be getting any revenue, but they want you to, stay open. They want you to take care of the employees. Government doesn't want all the people to file for unemployment because that's going to create more chaos in the system. So they want to provide the money and through loans and the grants to you so you can keep the employees employed. The first one is the economic injury disaster loan that we're going to be talking about. So the next slide. So what is this loan? And people are calling EIDL, as it says, economic injury disaster loan. $10 billion are being allocated through SBA. This money is coming directly from the government. So there's no banks involved. It's coming from the treasury, this loan. And this is a loan, mainly looking into your working capital for this loan, your operating expenses, rent. How are they going to calculate how much loan you are going to get? It's still not decided. However, what we believe, they're going to look into your revenue for last year or the taxable year that you filed the tax return, and also the gross profit, and use a percentage potentially based on the industry. And they're going to assign a loan amount. Next slide, please. So what is this? So this is a 100% guaranteed SBA loan. That's the max people can apply for or will get it. Depends on the size. What they have created, came in this Monday. This was not even there. So once you apply, government is now giving you $10,000 immediately in 3 to 5 days that comes to your bank account directly as a grant. So you don't have to pay this money back. And then they're going to take 2 to 3 weeks, might be 4 weeks, to assign you what's the loan amount that you are eligible for. The loan is a 30-year loan, and it's a 3.75%, based on credit score, as low as that. If the loan is below $200,000, they're not asking for any personal guarantee. If it is over $200,000, then they're going to look into, assets that you have. They're going to put UCC filing, personal guarantee, all those things are going to go through that. So that's what it is about this loan. And again, how are you calculating the loan amount? Again, there's no clear-cut analysis. They're still working on it. Originally, they were saying that you're going to get this loan in 7 days, but I'm sure they couldn't figure it out. That's why they're giving $10,000 immediately. And they said now it's going to next. And then who is applicable for that? Any company who has less than 500 employees altogether. So you might have 5 companies, but together you have less than 500, you should be applicable for that. And your covered period that the loan is there calculating on is January 31st to December 31st of this year. So take an example. If you have a restaurant and you have $1 million sales last year, so and then you have a gross profit, it might be 700,000. So they're going to look into that number, those 2 numbers, and then figure it out, okay, what do you need to keep this company open for this year? How much they're going to give you probably is going to come in 2 phases. First phase might be for 6 months, and then they're going to give another 6 months. Because government still doesn't know how long this pandemic is going to go for. So that's, the application already opened last week on this one. They just changed some of the rules, and the application form has just changed based on Tuesday. So, we can help you there if needed. Next one. The payroll protection program. So that is part of the CARE Act. So that was a on this area is $350 billion of fund. What does it cover? They're covering your payroll. Now, payroll means W-2, not the 1099. 1099 people can apply for this same thing by themselves. So payroll benefits It's all cost, means vacations and all those. So they're going to go back and look into what was their average payroll per month based on some last year's history. And then whatever per month, then rent or mortgage, interest on mortgage, utilities, interest on other debt obligation. So if you think about what are you looking into? You're looking into, okay, the government wants you to make sure you take care of your employees and you pay for the property that you have, the mortgage, and you keep it in the lights on. So they wanted to give you money for that. Come in the next slide. All right, so the next one. So now, as of yesterday, little things has been changed. So this loan, let's say, take an example. Your restaurant, you are a $1 million business and you have monthly payroll and rent and mortgages around $50,000. So let's say government is going to calculate by 2.5. So 50,000 multiplied by 2.5 is 125,000. So that's the loan you're going to get. This loan is going to come from the bank. So the applications has to go through in a bank, SBA approved bank. The interest rate is 1%. They just changed it. It was 0.5% yesterday. Today they changed it to 1%. The term is 1 year. So how is this going to work? So let's say, so $125,000, the bank is going to give you that loan in this interest rate at the term, as long as you can demonstrate by the end of the year that you have paid your employees for this period. From that money, you have paid your mortgages, and if you have paid your utility bills for the business, they're going to waive this loan or convert this loan to a grant. So again, the money is going to be converted to a grant. So you don't have to pay back. Again, the objective is the government wants you to take care of the employees and the properties that you have building, so you don't close down. So that's the main thing. Again, within, and let's say you got $125,000 and you have brought some of the employees back, paid them so they are not claiming unemployment, and you have only used 100,000, and you can prove that you have used 100,000. So what happens at the end of the year, you prove those things, 100,000 will be waived, other 25,000 will stay with you at a 2-year term at 1% interest. So again, it's a very cheap money. You can use that for any operating cost if you need. Same thing on the other one. Other one is 30-year term, 3.75% interest. So you get that loan. Again, it's a cheap money, and you can use it for operating cost later on. So it will be a loan that time. Next. So there again, to qualify, payroll, mortgage, rent, utilities, payroll is limited to 100,000 per employee. So if they are making more than $100,000, then they're going to cap it on that. Next. Say it again that you have to have less than 500 employees. You have to show that your business has been impacted. The cover period, February to June, that's what they are looking into, but they're giving you for 2.5 months at this point. And they wanted to make sure your business is operation at February 15th. Employees and independent, so the independent contractors is another change just came in yesterday. The independent contractors are 1099. They can apply for this by directly going through that. So yours is more going to be W-2. And again, cover period come back, and application process just opened today. So again, the banks will be bombarded with this. We already got the applications ready. We have already taken applications for many, many companies at this point.
And Sam, this is Tom, just to reinforce that. So it was a big kind of transition that happened some point between yesterday and this morning, that contractors are no longer part of your calculation. So just to let everybody know that. And if you are working with contractors, make sure as part of your regular staff and team, make sure that they know that they should be filing for this, for the payroll protection program on their own. They need to do this independently. So go ahead, Sam. Sorry about that.
No, very good point. Exactly, that's the point. This is just a change. As of day before yesterday, the interest rate was 4%, 10-year loan. This was. They changed it yesterday, 2 days ago. It's 2-year, 0.5%. Now they changed it to 1%. So it's still fluid. To be more changes coming in, but again, that should not stop you from applying. That's the main point. So you should get this money for your business as quickly as possible. Faster you apply for both loans, you will get some of the loans as a grant, and then at least the loans are going to be there. And again, you can decide whether you want to take this loan or not. As long as it's approved, they'll give you some time that, okay, do you want this loan? That's your decision. Some companies might say, I don't want to take any more liabilities. But many companies say, this is cheap money. Let's use it. Pay other loan off using this loan. So you can do many things with that. All right. Thank you.
And so Sam, I'm just going to interject with a quick question here then, just on this specific, because I think this is a hot button topic for folks. So then if they submit, they get approved, they do not have to use the funds, is what you're saying?
Correct.
Okay, great.
I got on the call late, but I did have a quick question for you. With the payroll protection program, can you get that loan even if your payroll hasn't significantly dropped? I'm sorry, gross revenues haven't significantly dropped?
Yes, you can still get it.
Okay, they're not looking and saying, okay, you haven't sustained a substantial enough economic injury to be qualified?
Again, it's not clear on that. They're saying on the beginning that you should apply if your business is covered, economically impacted by that. But again, how are they going to judge that at this point? Because you don't know next month what's going to happen. So it's
exactly.
So it's up to you. I still believe you should apply. Now, if you are not using this money to pay the payroll because you got revenue coming in, this becomes a loan for 2 years at 1%.
Okay. So even if it's a loan for it's still cheap money. Thank you.
It's still cheaper money, yes.
I have a question.
Sure.
Yes, I noticed that you said now small, let's say independent contractors, sole proprietors are eligible. I have a small business. I am a single member LLC, but I have independent contractors. It's a language service business. So we have our interpreters and our translators that go and do the job, and we get paid by the courts and by our clients. But right now we have been impacted because all the courts are closed. We don't have any cases, and So what kind of eligibility can I get as a single member? So I'm basically the only employee, but I have, we have hundreds of interpreters that go, as independent contractors.
So good, very good question. A lot of them companies will be affected like this and like yours.
And I also, it's a home-based business too. That's
sure, that's fine.
Yeah.
So it's a very good question. A lot of the companies will be fitting in this area. We still think you should apply for both loans. So the first one is the EIDL, Economic Injury Disaster Loan.
Okay.
One, because you have an LLC, as soon as you apply, you would get $10,000 as a grant, number one.
Okay.
But two, we believe based on your last year's tax return revenue, that what you filed in 2018 at least, based on the revenue and your gross profit, they're going to allocate, government is going to allocate a loan for that. And you can decide whether to accept that loan at 3.75% as low as for 30-year loan. Depends on the amount. You can accept that or not. That's one. On the PPP, it should apply again. So this is your income because you are sole proprietorship, and you're going to lose, or you are losing your revenue, right? So this is your average monthly take, that whatever you take. So let's say you are drawing around $10,000 a month on that, and you're paying taxes for those self-employment taxes. So it could be $12,000. So that $12,000 multiplied by 2.5, so you should get around $30,000 through the Paycheck Protection Program. And then once you, because you are the sole proprietorship, so you're taking that money, you should be able for your paycheck, and then the high chance they're going to convert that as a grant for you. But again, they're going to go through your tax returns and what you file. So that's the way they're going to calculate all this stuff.
Okay. Okay, thank you. And do you helping with the application? Is that what you're doing? Your company?
Yes, we do have a very straightforward program for businesses, small, medium, large. So the small businesses that we talk about, $1 million revenue or less. The medium is $1 to $5 million revenue, and 5 million and above we're calling it a large business at this stage, or for the small business group. So we have a flat fee. So for anything below $1 million, well, for both applications, we charge $2,500.
$2,500?
Yeah, $2,500, and I'll come back to you. And we charge $1. Anything over 5 million revenue, %, that we, or 10 to 20%, we take it during the application, and then rest of the money comes once you get the money. So take an example for your business, we'll charge $2,500, and for both applications, $500 we'll ask at signing the contract, and other $2,000 will be deferred once you get the money.
Okay.
For $5,000 fees, we're charging $750, $4,250 after you get the money. For $9,500, $1,000 at signing contract, and $8,500 when you get the money.
Okay.
That's the way we have a very straightforward model. If you, and you can go ahead and apply for it yourself. There's two different applications. One is the government, EIDL, that you have to go online and do those. And then the other one is with the bank. The PPP has to be with the bank. So your local bank, SBA approved bank. We work with a lot of different banks. So we got all the applications ready, or getting it ready, and sending it to them with all the documents they need. And it's the processing time, whatever it takes, 2 to 3 weeks probably, that is going to take. So that's where we are today and how we are helping the companies.
Okay. Okay. And I have another question that is not directly related to this, but I mean, I see that, when you first started talking, you said that your company, basically helps businesses to become profitable, to grow, and, to create value. So, outside this, coronavirus situation, is that what you do on a daily basis? I mean, regular basis, helping businesses grow and scale?
Yes, ma'am. Absolutely. So we have, as you saw, the number of local. Then we do a lot of cost reduction and revenue enhancement projects for various companies. We help companies to grow, means whether it's a franchising, whether it's a grow internationally, or how to do pricing properly. That's the revenue side. And the cost reduction, we look into all your major cost structure, whether it's an insurance, telecom, rent, facilities, maintenance. We look into that, and how do you bring that down? So we have very skilled people on category by category to bring those down. So your bottom line goes up.
Okay, yeah, because I'm looking into that, to
Very
scale
good.
the business and need
Mhm.
help with that.
And
Okay, we'll talk about that. Yeah. Later.
sure.
Okay.
And Sam, do you want to continue on here for the next piece on the other options here? Anything else you'd like to cover on your
And keep it.
presentation?
No, I think all of the things that we have covered already. So keep this page on. The previous page will be fine. The page. This is pretty much the summary of both loans that was available, except there's a small change on PPP. The fixed rate is now 1% for 2-year term. It's just changed yesterday. So that's the way it is now. And it's a maximum. They give you $10 million. The EIDL, the maximum is $2 million. So this is what you see in a high level, the summary of these two loans. And
Great.
so any questions that we have, we can, about your companies or anything that you have a scenario you want to discuss, we'll try our best to answer.
Yeah, thank you, Sam. So attendees here, while we have Sam on the line, I know we've asked a few questions, but you should be able to unmute yourself or type into a chat box, and I can read the question for you. If you have some specific questions, go ahead and ask away, please.
This is Brian Tekla with WJP Restaurant Group. I've got a couple of quick questions, and then I'll open the floor. On the EID loan, now you mentioned that when you first apply for that loan, or is it after you qualify for that loan, they send you like $10,000 grant up front before they finish the loan processing? Would you have to pay that back if you decided not to take the loan once it got completely processed?
Good question. No, at this point, the regulation is they're giving you pretty much a free money to keep the business open, that $10,000 a grant. So even if you don't take the loan, you don't have to pay that back.
Gotcha. Okay, and also on the PPP CARES Act, what's the timeline they're looking at getting the funds out to the customers or the people?
Sure. Between 2 to 3 weeks, I would give 4 weeks at least, because originally, the EIDL, they were saying 1 week, then they stopped that. Now they're saying 2 to 3 weeks too. I would realistically between 3 to 4 weeks.
Gotcha. And then one last thing. I know that one of the items that's covered under the PPP is premiums for health insurance. Now, does that also cover like liability insurance or workers' compensation insurance as well, or is it just health insurance?
So what they're looking into, think about it this way. So they're looking into payroll, rent, mortgage, and utilities. Those are the main things. Mm-hmm. So in the payroll, your health insurance should be part of that because you want to keep the employees, right? So that's why health insurance costs, vacation costs, anything like that is part of the payroll cost. And then on the other insurances, at this point, there is no clear communications that they're going to do that. So it's a property liability insurance or anything like that. They are not saying that it will be included at this stage.
Hey,
gotcha.
Sam.
Thank you.
Hey, Sam. Yes. This is Tom. We had a question come in from the chat box here. And the question was, does taking the EIDL loan impact in any way your ability to get the PPP loan, the Paycheck Protection Program?
No.
Does it impact anything in any way there?
Good question. It does not. Again, I would say last 1 week, there are so many changes between these two. Originally, they were saying you cannot apply both at the same time, just last week. So it's confusing. Now they're saying clearly, yes, you should apply for the both one. So the way it is going to happen, so I'll give you a good example, realistic view. So let's say again, I'm going to take the example of the restaurant. So let's say you have $1 million revenue and your gross profit is 700,000. So your payroll is below that gross, after that. So I'm not including the payroll. So it's a 700,000. and you apply for the EIDL, and let's say for 6 months, you get a loan of $400,000 approved at a 3.75% 30 years. So great, you accept this. Monthly payroll, mortgage, utilities, and let's say it's $50,000 per month, multiplied by 2.5. And I said, all right, I got PPP and I got this 400,000. So you can use the PPP money and don't take both of them, but you got approved. So if you want, you can say that, okay, I've used this money and you accepted PPP because it's 400,000 that you got. You can actually deduct that 125 that you used to pay your employees and mortgage and utilities for 2.5 months and prove that. So your loan will get reduced from 400 to 275. The EIDL loan for 275. Does it make it clear?
Yeah, that helps. Thank you. Thank you very much. And
I would recommend all of them go ahead apply for both, because at the end of the day, let's think about it. This is low interest loans they're giving. Even if you don't use the PPP for something, I'll give you an example. Yesterday, we have a restaurant client came in and the restaurant owners are saying, well, I've already closed my restaurant. So people are already filing unemployment, right? So people are, getting $600 more because of the current laws that they have signed. I said, I don't know whether they're going to want to come back and work for the time being because of social distancing and anything. I said, the purpose is not that. The purpose is still to take care of the employees, tell them that you're not fired or anything, will still, based on the money you're receiving, and that, because it's all inclusive. And even say, if you don't use that money and you decided, okay, I'll open it after 3 months, you can use the money for a 1% 2-year loan. So the recommendation for small business, if you're used to having loans, then these are very cheap loans that you'll be getting at the end. So it's worth taking it at this time and then improve the business. If you don't use the loan, return back the money. So that's fine too, that you don't need to. But if you get it approved, at least get it approved, you got something to fall behind. If anything happens, something is covered for you. It's important. The question.
Sam, we had a quick question come in that asked if they can use the loan for a new business.
No, it should not, because the purpose is this. It is for your current business. Especially the PPP, you can't use it. They're all saying that you have to use it for this new business. Now, question is, how are they going to catch it? I have no idea. You have to prove it to them, and if they find it, then I don't know whether they're going to change anything. But at this point, the objective is let's just use it for your current business.
I have a question, Tom.
Yes, go ahead.
On the definition of independent contractors, I'm in the auto industry and I do hire people. Most of them want to be in 1099 employees.
Mm-hmm.
And we do pay them electronically and then file W-9s and 1099s at the end of the year, which was end of January this year.
Mm-hmm.
So if I prove that, and I'm paying them already, I'm keeping them on board, because they are 1099, they have to apply themselves. I could not use that as a proof of payroll.
Correct. So that law just came in yesterday. Originally, they said you could use the 1099. So now the government is saying, for the people who have 1099, so they are self-employed, and they can go ahead now apply for the Paycheck Protection Plan by themselves. So you wanted to give that message to them as a guys, I can't pay you anymore now because the business is closed, but because you are a 1099, go apply for the Paycheck Protection Plan. So they should apply for that. Now, also on the other thing, what you should do, you should actually apply for the EIDL. The EIDL is not looking into everything yet. They will look into your tax returns and all those. However, you might be able to get a loan for the company for a long-term 30-year loan, or based on your revenue and gross profit.
I did apply to EIDL actually. It's very short and quick process.
Yeah, but at this point, that is just it was not like that last week. We need a lot of applications, and what they have done, they just wanted to get some money out. So you'll probably get $10,000, and then they're going to ask you more questions before they can give you another.
Yes, they were asking 12 months, trailing 12 months as of January 31st, your gross sales and cost of goods and all that.
Yeah, right.
Yeah.
Yeah, but I believe before, so you'll get $10,000 next week, but I believe, before they can assign you a loan amount, the question will be asking. So they just bought time at this. Our applications and everything were up by 3:24 on Wednesday, Thursday. The system was locked down. Nobody could get in. There's one last week time, the system was down totally. Then at that point, what they did, they started changing the model. So they created this form a lot simpler at this point. But the purpose of this is just wanted to get out $10,000 and then use the methodology that they're going to come back with based on industry, on sales and gross profit, and see what they can assign a loan. At that point, before they assign a loan, we are confident that they're going to ask you tax return and a lot of other information to validate before they can give you that loan. And actually, this information they were asking before they even roll out a $10,000. So they thought they can handle it in 5 days, and they figured it out as not possible. So they said, all right, let's give $10,000 everybody. And then we got 2 to 3 weeks to figure it out how much loan we can provide. That's behind the scene. That's the mindset.
Now, sorry, the independent contractor portion that I could not use it for my business, that's for forgiveness of 75% of the loan they give you for that purpose. But if I show them I need that money for lease and everything, it's still a loan at 1%, right?
Mm-hmm.
But you could not use it for independent contractor purposes.
Correct. Yeah, if you use it, that this is going to be a loan, not a grant. They want to the grant.
This can't be used for a new business. I'm in a little bit of a confusing situation because I'm an existing business, but I'm trying to franchise my operations. Now, would that be considered a new business, the franchising aspect of my local operations, or would that be considered just growth? And maybe Tom would also weigh in. I don't know.
Yeah, so it's a very good point. I would say there's no clear-cut answer to that question. I've heard this question already. At this point, what they're saying, we want you to use the money to keep your door open and to take care of the employees. That's the main objective, right? So unless it's changed, let's say you get the loan anyway, and you use it for something else. And if the laws doesn't change based on the purpose of this, then they're not going to ask you, okay, give our money back. They're already giving you a term as a loan. So you can still use that money and then pay back, PPP, you can pay back in 2 years at a 1% interest. And EIDL, you can pay back in 30 years, 3.75% interest.
Go ahead, Tom.
And Sam, this is Tom. I'm going to jump in here too for a minute. So depending on, a lot of our clients are at the very early stages of franchising, meaning that, you might be just getting either the documents completed or you're just launching. So a lot of our clients have maybe sold somewhere between just starting the documentation process to having less than 10 franchises in the market. And if you're in that phase, there's a good chance that your franchise company probably doesn't even have any employees as of yet. So you'd be filing for this under your existing affiliate or company-owned units because your existing franchise company probably doesn't have any employees. And if it does have employees, then you should file under that company. I think, as Sam had mentioned, if you have multiple businesses and multiple companies, you'd be able to file for each business individually. Is that correct, Sam?
That is true. See, the thing is they're looking into on a consolidated basis is below 500 employees, and there's some threshold on the revenue they're looking into for the loan. I believe it's some 50 million or something, that if you go above with the consolidated, that this loan might not apply to you if it is in one company. But you should file individually if it allows you to do that. So if it is not, hopefully each business is under a separate LLC for you, and you need to go in and file each one of them separately. So that way you can keep a track of how much loan you're getting for each one of them, and you're using the money for that business. So it's easier for that. You might be able to get a little larger loan, or even some of the money that can be waived accordingly.
And one other thing I'd like to say too, to that point, for our clients that are a little farther along in the franchise process, that have, even if you have one franchisee, make sure you are sharing this information with your franchisees and showing them, sending them links or sending them information to help them through this application process as well. Certainly your longevity as a franchisor, you want to keep them up and running, keep their employees on board, so that as we get through this coronavirus situation and we get to whatever our new normal is going to be, that they can not just survive but start to thrive in the new world that we're living in. So I'd just like to make a reminder, if you're on the call or on this session here and you have 20, 40, 50, 100 units out there, each individual owner and franchisee should be doing this as well.
True. Any other questions?
Great. Well, Sam, thank you for joining us today. I really appreciate it. Again, Sam Data with PGV Advisors. Thank you for taking some time to share some of your information and wisdom of having gone through this and helping clients through it. For those of you that have attended here, we are recording this and we'll be sharing it. We'll be sharing it through a video share, and we will also email out a copy of the presentation for everyone to have a copy of the presentation that was used as well. And Sam, how would someone get a hold of you if they have more questions? What's the best way for people to get in touch with you?
In the presentation, both of our name and email address and telephone number there. Best to reach out on the email. Our website is up too, so you can reach out either Chris or I at our email address, sdata@pgvadvisors.com. Our phone numbers are also there. We're here to help you if you need it, and that's the most important thing.
Great. Well, thank you very much. We appreciate it. Thank all of you for joining, and enjoy the rest of the day here. And please know that anyone from Big Sky is here to support you. So if you have further questions, concerns, comments, we're happy to help support you and help guide you as well to navigate this new coronavirus economy, as we're calling it. So thank you very much.
Again, stay safe, keep everybody safe, very important, and wish you all the best.
Thank you.
Thank you.